We will then get into this hour where we get into a bit of an economic conversation. And when we're looking at how you can navigate the private sector terrain, and you is who, we'll look into that as well. And the key economic indicators. Our guest is already in the hot seat this morning. He's an economist with the Standard Bank Group, otherwise known as Stanbic to many of us. And Christopher Legilisho is here with us in the hot seat this morning. Christopher, good morning.
Good morning.
Karibu Sana.
Santi Sana.
Like I said, you're in the hot seat of Situation Room, looking at some things very important for us to push through when it comes to the economy. So we'll be looking at that. You, of course, here to give us those insights. But even as you do, we're going to put you to a little bit of work as you try to cool down in the hot seat this morning. CT Muga goes around the African continent every week. Comes back from one country every Monday with a basket full of proverbs from that particular country. So today he's going to share which one he's with us today. And then we'll give you, the awesome job of interpreting that for us. Fair enough?
That's fair.
Okay.
We are in the Gabonese Republic, the Republic of Gabon, a Central African country. But this part of Central Africa that sometimes looks like it's in West Africa. It isn't. It's actually in Central Africa. A proverb: what comes out of the mouth has lost its master.
Well, that's an interesting one.
It is.
I think it references that, what I think is that you need to be careful with what you say or what people say, because you never know how what you say is interpreted by others. Mm-hmm. A lot of times we can say things and we don't realize that you've offended somebody else. So be careful with what you say. I think that would be my interpretation of that proverb.
You've put it very well. Simply and to the point, yes.
Absolutely. Exactly. Very simple, to the point. And that's it. And as we get into the conversations, perhaps some of those things that we look at economically may not be so straight and easy for us to understand. So that's why you're here, obviously. So thank you very much for that. And as we get into it, we talk about these indicators. We talk about navigating the private sector terrain. And it sounds like, some highway where only certain people are then able to walk through, and that there are shades and covers from here and there, and somebody's got to shine a light for you, say, step here, don't step here, do this, don't do that. Is that what the terrain looks like, even before we start to look at the indicators that can help us get through it? And when we talk about navigating the terrain, are we talking about governments? Are we talking about small business? Private sector, of course. Walk us through that and why this terrain sometimes needs direction.
Thank you for your question. I think the terrain that we were referencing is just the normal day-to-day that people get on with. For example, you'll have people going into their offices, corporate offices today to offer goods and services. And so the terrain that I think you're referencing is what small businesses do, what big businesses do, and then the difficult terrain is what will government do, how is the policies that they're putting forward impacting how small businesses and big businesses interact with one another.
Yeah.
So when we talk about what we're seeing in the private sector economies, I guess the interactions between for all of these different sectors coming together.
Okay.
Yeah.
We talk about private sector growth, and that we've seen significant growth in the private sector. And when we look at this particular year, in terms of what has been happening, what has fueled the growth of the private sector, and whom are we speaking of when we talk about private sector growth?
So when you speak about the private sector, we are mainly referencing those in the formal sector, not necessarily the informal sector. Mm-hmm. Although the informal sector is quite substantial in this economy. I think they account for around 85%. The growth what's driving that growth has been, one, we've seen a bit of stability in this economy. Some of the things that were hindrances last year have become boosts, I would say, this year. For example, inflation has declined. exchange rate has been stable for the last several months. Interest rates have also come down. So those, I believe, are what are beginning to contribute to the positivity that we're seeing in the economy. We've been able to maneuver some of the hurdles that we faced 2-3 years ago. The weather has been also quite favorable the last 2 years. It's just begun raining this past week. I think that also contributes to the positivity that we're seeing in this economy. Plus, I would also add the political stability we've seen since the protests last year has also contributed to the fact that the private sector is able to operate and improve.
Okay.
Yeah.
You know, when one thinks of banks, we're talking about banks early on in the day, and we're talking about the profits that banks declare. They tell you about quarterly, half yearly, yearly, and we're looking at the amounts. Then we even took a stab at what it is that people who are in the highest offices in financial institutions, how much they earn. And we're saying, whoo, a lot of money. Now, banks' money, we understand. An economist working for a bank, what on earth do you do there? Because we used to find you in the treasury. There we'll find you in plenty, we know that. If we look at civil society, we find you there, we know that. NGOs, we find you very often there. People of your ilk. What do you do in banks?
So what economists do in banks is a good analogy would be we provide like a weather forecast. We help our clients navigate the terrain.
Weathermen.
So you could, I think that's the best analogy I would use. So as you go and interact with your clients and also with internal stakeholders, you're helping them to understand what's going on in the economy and giving them insights as to what you think will happen in the coming weeks, coming months, and that helps them to at least be aware of the risks that they'll likely face in the coming period.
Let me get an example of a facility that banks in this country have had an offer for the longest time. It's called a personal loan. Okay? When it was brought about, we understood it. We took it. I took it. It was given. Now, how exactly, and to tie what you do with this, how would the advice you give and the position you take help a bank in, say, for instance, making a decision to provide that sort of loan, which came without you actually providing any security, so to speak?
That's an interesting question. So the way I'd look at it, for the advice I'd give a bank is a good example is last year we had high interest rates in this economy. The reasons why we had high interest rates, there was, I think, a perception that the risks had increased for our country. There was a concern that Kenya potentially could have defaulted with the June Eurobonds. And additionally, there was a bit of liquidity crisis at the time in government. When you read the papers, all the news was quite negative. So to internal stakeholders, we would tell them, look, you need to be quite careful as you lend. When you have high interest rates, it's likely that those clients will want to step back from taking loans. So you kind of alert them to the reality that business might be quite challenging in such an environment, and therefore, as they lend, they need to be careful as to who they lend to. And to clients, those who, for example, can keep on operating even in high interest rate environment, you tell them, why don't you wait a while before you take a loan, wait for interest rates to come down, then you can take facilities. So you try and walk the journey with your clients, giving them the best advice that you can. We do not get all our forecasts right. A good economist, most of the time, will get half of their forecasts right. So sometimes the things we tell them don't actually end up happening. And for that reason, I think that you try and give the best advice that you can at the time that you're interacting with your client, and you hope that that will help them to make the best decision for their respective business.
All right. As a weather forecast for the banks now, the key important factor in all this is always the numbers and pretty much the vision what it is to come. And if you look at the latest PMI index, there's a lot that has been said in terms of a stabilizing economy and how that has in turn contributed to, say, new orders and businesses just doing well. In terms of the health of the economy, where would you place it?
I would say we have an economy that weakened last year and is slowly beginning to, you're starting to see growth coming. The PMI is a good indicator. It gives us like a signal as to what's currently going on. If you look at the indicators, for example, that come out from the Kenya National Bureau of Statistics, they typically come out with a lag. So we do not know, for example, how the economy grew for full year 2024, and we are already in March. So the PMI just gives you a good signal as to what is currently happening on a month-to-month basis. And what we've seen, at least for the last 5 months, is that the economy, as you said, has stabilized. We're seeing strong output, meaning production is doing really well. New orders are doing well. Employment is generally stable. We are not seeing job losses. We are generally seeing employers keeping their workforce. Around 2% of employers are hiring. So those are positive signals for an economist that, yes, despite the challenges we've experienced, there are signs that the economy is quite resilient and businesses are thriving, or at least surviving in this environment.
Right.
Yeah.
So what needs to happen in order for you to get from survival mode then to thriving? Because even with all of these numbers that we have seen, inflation dropping, we look at exchange rates, then, balancing out. But we still look on the other end of things, and then life just seems a little bit harder for a lot of people. That there's really not enough shilling for your filling, that you still find that there are extra taxes being applied here, another levy here, an increase in this levy, that, the other thing when you buy fuel, when you buy food. So what then needs to happen? Because they say you can make the perfect circle if you have all the elements going round in this cycle. So what needs to happen for you to strike that gold where you can say, actually, this is an economy thriving. This is the private sector thriving if certain things are all working in tandem. And what would need to happen for all of that? I mean, because countries, organizations, businesses have achieved economic success. They have. We've seen it. What are those elements and how do they play to ensure that happens?
I would say, first of all, we need, or the private sector would need, one, having a stable environment, which so far we do. We could debate about that, the kind of stability. Secondly, you want predictability in, for example, tax policy. One of the challenges we've seen a lot of businesses face is the fact that over the last, I could say 3 years or so, we've seen very unpredictable government policy. That makes it very difficult for businesses to plan and set their strategies, because they don't know what to expect in any, like, 6 months down the road or a year down the road. And that becomes very difficult when a business is trying to manage its costs. So I would say having predictable government policy would really help. They've done really well with regards to lowering inflation. And I think part of that is the fact that we've had good weather. So if we have low inflation over the coming, I would say, 2 to 3 years, that would really also help this economy, because since COVID, we've been through a series of shocks, global shocks that have filtered through into this economy. So my sense is, if you have a period of just general stability, that will help the private sector recover and begin to thrive. But to my mind, having predictable government policy would really help the private sector.
If you look at the economy as it is now, everybody has an opinion on what the economy is like and where we're headed. But there's been this discussion, it's an ongoing one, about the cost of living, how it has gone down. And then there's been a competing conversation. They seem to say, yes, that's what we're being told, but people still can't afford to live. Now, so if we're looking at the economy from a PMI perspective, how would one explain this?
So the way I could attempt to explain this is you still, despite the fact that the cost of living has gone up, every day you still have Kenyans waking up to go to do some kind of work, regardless of the harsh conditions that we are currently facing. And I think that is how I would capture what's going on. Regardless of what's going on today, you will still see corporates the same corporates that were, for example, producing soda will continue to produce soda. Children are going to school. The education sector is still growing because of that. So while, yes, costs have gone up, the PMIs would reflect that in terms of, for example, the input and output prices of goods, and you would see it, and to some extent for a lot of last year, and I would even say 2023, when you looked at the PMIs, you would hear, the purchasing managers that we interacted with spoke about the fact that cost pressures are what was inhibiting them from the economy from generally performing at its most optimal level. So, regardless of the pressing cost of living challenges, every day somebody wakes up, still goes to conduct their business affairs. Sometimes you make losses, sometimes you make profits. So you have those ebbs and flows. But the fact that people are constantly going about their day.
Are they operating though? Are they doing that based on the actual numbers that they can see? Or are we doing that based on some hope that things will get better? And I always liken it to like when you're in traffic and you see the hawkers along the road, right? And you say, okay, so there's a guy who's selling mirrors in traffic. And you think to yourself, how many mirrors is somebody going to buy in traffic? Or how will you be sure that everybody who's going through traffic is going to buy the 4 mirrors that this gentleman is selling? But something brings him back to that traffic every day. Something is taking business leaders or business owners back to open their shops every day. Is it the actual numbers that we are seeing of people walking into the shop and buying, people walking and asking for goods and services that's bringing them back? Or is it a hope that the economy, exchange rates, interest rates, business environment, the weather will be better tomorrow?
I think it's the hope that conditions will be better. Because my sense is, and actually in the PMI, there's one question, a subjective question that we always ask. How do what's people's expectations 12 months down the road? And consistently since COVID, what we've seen is that optimism has been weak. We've not yet recovered from the levels of optimism we used to see pre-COVID. And that speaks to the fact that people still show up at their jobs to provide for their families, to meet their own goals, and not necessarily they may not be optimistic about the conditions that they're facing at that time. We hope that conditions do improve, but generally you have those ebbs and flows that you will still show up regardless of the conditions. I mean, you'll show up to work even if it's raining. You'll show up to work if there's a flood. Maybe you may take a day off for the floods to pass, but you still will eventually come back to your business and try and pick up whatever is left. And even on a sunny day when things are bright and shining, you'll show up and maybe you'll be smiling a bit more. So people still show up irregardless of the conditions, and that's why I like using the weather, because it does allude to the ebbs and flows that we generally face on a day-to-day basis.
All right. Now, when you talk about growth of the economy, there is a lot of contributing factors that lead into that. And if I just look at the PMI, we have the business growth that was fast, but this as well was occasioned. On the other side, boosting business sales was low. But then again, you couple that factor with government policies and the fact that you cannot tell what government policies would be in the next 6 months and how that is affecting the overall growth. But then again, even the economy itself has been boosted by things like manufacturing, So in terms of just looking at the health of the economy, what are some of the areas that you're looking at that will help the economy grow moving forward?
So just, if I could just take a step back, you talked about, let me say, the economy has been weak, and we're starting to see signs that it could get better. And the reasons why they were weak, as I think we've talked about, taxation policy has not been most optimal. We think maybe there could be improvements there, but interest rates were really elevated. That slowed down credit uptake for most businesses. Actually, for the first time, I think in over almost 10 to 20 years, we've seen credit uptake contract considerably. So we are beginning to see some improvement because of the stability in some of the macros, but we are not yet there. So the PMI is a good leading indicator of the fact that we are starting to see some improvement, and that will take time to filter in, to the whole economy. And right now, to my mind, the biggest risks that we face relate to the fact that Kenya has been considered to be in high risk of debt distress. And as the government tries to address the debt situation, we are facing or bearing the brunt of that in the rest of the economy.
How are you bearing the brunt as a bank that deals with this? Because as you talk about Kenya being at the risk of debt distress, we also understand that the government is taking a lot of debt from local banks. So how does that then again also affect the locals, Kenyans, accessing debt if the government is the number one debtor?
So as government continues to be the biggest borrower in this economy, they've crowded out the rest of the economy.
Yes.
So the private sector is not getting the credit that it should. I think that's number one. I think secondly, no, I'd need to take a step back.
Okay.
I think
That's all right.
It's okay.
That's all right.
You asked about how it impacts the
Yes.
bank.
Yes.
The question, or my sense of it, is banks, although I think Citi mentioned it at the start, banks have been making good profits.
Yeah.
Very good profit.
So they have been. We've seen them readjust their strategy. They've been also one of the major lenders to government. Last year, if I could just put it out there, the government was borrowing at very high interest rate levels, close to 18-19% in some instances. So they are profiting from the government's huge appetite for debt. But it's coming at the expense of not lending to the rest of the economy.
Yeah, essentially. And those are some of the things that we could look at. I'm just going to get over some humps and challenges here. I'd like us to take a break and come back and look into that with a little bit more detail. Economist with Standard Bank, Stanbic, is Christopher Legisho, and he's helping us walk through this private sector terrain and the indicators of a building economy and a successful economy. And we'll come back and continue with that conversation after a quick look at weather and traffic. Don't go away. It is 29 minutes to 9.
We value your feedback and welcome your comments, queries, and complaints regarding our content. You can get in touch with us via SMS on 22151. Call 071.
Women to turn their skills into thriving businesses. From training to funding, your success is our priority. Join the KCB to Jiajiri movement today. Your path to financial independence.
Rather, the destruction was untold in terms of what happened to businesses and what happened to entire sector, brought to the ground because of non-movement. So things started to pick up. You know, like we've seen the numbers, inflation has gone down, things like that has happened. But the true picture in the pockets and businesses of people is that it's just a little bit harder. I mean, I look at the real estate sector, when we look at buildings that have been put up and people are not taking up the rent, or people who have previously taken up the rent are having to move. Buildings are offering, 2 years, take it up and, don't pay for the first 6 months so we can insure. People are eating and feeding their families on the stock of their businesses. This is a March 13th conversation in terms of what is happening. And these are folks who are in the private sector. They are. So what would be the turnaround that was needed to put stock back into the hands of businesses to ensure that these buildings that are rising, people are able to take them up? Because it's cyclical. If one thing doesn't happen, it affects another thing and another thing and another thing. And that's what the economy kind of looks like to me. So what would need to happen? What would put more money in the hands of businesses in the private sector?
So I think I would prefer to have less reduction in taxes. I think that would be one thing that would really help many people at this moment in time. Secondly, when you have a favorable investment climate for all businesses, a sensitivity from our government would really help, especially in this moment, because as you rightly pointed out, since COVID we've gone through a series of shocks. In 2022 we also had the droughts, and that also caused significant disruption to people's lives. So allowing people to have more money in their pockets would really help, because then as they have more money they can choose to spend, and it circulates more in the economy, and government to some extent would also be able to benefit from that growth. Hopefully in upcoming fiscal years we'll see the government taking that into consideration, having more predictable tax policy, possibly lowering some of the taxes that they've recently introduced would really help, at least to my mind, because you're right, the economy hasn't been performing as it used to. For many people, the cost of living is quite unimaginable, and we are in an economy where we have like 20 plus million people who work. Only a fraction of them have formal jobs. There's a huge, close to 85% in the informal sector. So trying to address that would to my mind, would help.
Yeah. Now, when we talk about the economy is showing signs of improvement, and with that as well, we know businesses, whatever it is, they sit and plan for the future. Because we talk about the forecast, there is always the aspect of a risk involved, and as businesses continue to invest and hope that things get better, they need to equally plan for what might happen, the risks. So, what are some of the risk factors that businesses would be looking at?
I think the first one is we are seeing a changing in just the global environment. U.S. policy with this new Trump administration has become very uncertain. Historically, we've become accustomed to the U.S. being like a bedrock of stability, and that helped. I think just global world order, but that seems to be changing, and so my sense is businesses need to be alive to the fact that there could be disruptions coming down the road related to this readjustment that the U.S. is going through. We've already seen that beginning with, for example, the withdrawal of U.S. aid. Now we're seeing these trade wars ramping up between U.S. and its allies. You don't know what I mean. Countries such as African countries that are very far from the U.S., we really don't know what the posture of the U.S. will likely be towards Kenya, for example. So they need to be alive to the fact that whatever is happening globally will eventually trickle down, and it could trickle down through, for example, more volatility in the exchange rate. So businesses need to be alive to the fact that you could have depreciation of the currency related to this the trade wars. You could have weaker global growth. What that means is exporters may not perform as strongly as they would have anticipated if you have weaker global growth. Inflation could rise because of the increase in tariffs. So again, cost of living pressures would be exacerbated. I would also say on the domestic front, we need to be alive to the fact that agriculture contributes around 22% of this economy. A lot of the agriculture that we do in this country is rain-fed. The weather tends to be erratic, so we've already experienced the shocks, and it seems to be becoming quite regular that you will have you move from feast to famine. So you have periods when you have elevated rainfall and periods when you have very dry conditions. That could also have an impact on our economy because it contributes a significant portion to the overall growth. So I would worry about that. And then just general political stability. If that is hindered in any way, it does have an impact on business. We saw that last year with the protests. The PMIs were a good indicator then. We saw a significant decline in economic activity around the periods when we had a lot of protests. So I would say that those are some of the things that you need to be worried about in the near term.
When government interventions come into place, obviously that has an impact on economies, and what government should be doing in terms of implementation of policy then becomes ground. It's front and center. We also know that the growth of many economies is not via taxes. So I can hear you when you talk about to have a lower appetite for increasing tax. But we also do know that industry and manufacturing are key growth elements for any economy around the world. So if government then puts in policies where you have growth in these particular sectors of manufacturing and industry, are these not direct recipes towards growth in any sector? But now that we're looking at the private one, is that not an indicator of growth?
It would be an indicator of growth. If you start to see news of expansion in the manufacturing sector, it contributes at the moment between 7 to 8% of the growth that we experience. So if you see increased investment and even change in policy that allows for foreign investments to come into the industrial sector, that will be a net positive for this economy. What's been quite interesting from the discussions we have with some of our clients is that they indicate that they're seeing a lot of movement towards our neighbors, for example, Tanzania and Uganda. And it's just the fact that they're seeing a stabler environment, more incentive to open businesses in those regions relative to Kenya. So I would say that Kenya needs to be, we need to stop being complacent. I think for the longest time, we've been known as the big boys in this region, but you might not realize that the neighbors are catching up and could likely surpass us if we're not careful, especially with the policies that we put in place that are not stimulative or helpful for the business environment.
When you talk about the government in terms of pretty much just the country not sitting pretty because we've been the big boys for a very long time, and rightfully said, there are those businesses that seem to be leaning towards our neighbors. And the fact that as well back at home you find the bureaucracies involved, and hence why businesses are packing up and leaving. What would be the correct policy? What would be the advice to the government in terms of creating a good working environment and giving incentives to would-be investors into the country?
So I wouldn't have the specific policy prescriptions, but I would say, number one, engage with them. Engage with the for example, the Kenya Association of Manufacturers. Engage with the Kenya Private Sector Alliance. have roundtables with these entities to understand what is hurting those specific sectors. A good example, I could say, that has, I think, worked favorably for this government has been the intervention providing subsidized fertilizer for farmers. So looking at ways that they can incentivize businesses to produce in this economy, make it as easy as possible to set up shop in this economy, attract the right manufacturers. There's a lot that's happening, for example, with artificial intelligence, technologies rapidly evolving. Possibly look at how Kenya could become a leader in these areas and try and reduce, I would say, make government as efficient as possible. I think I like what we're seeing happening in the US with this Department of Government Efficiency. I think Kenya having such would also be really, really good, improving efficiency within our government, to making access to government services as efficient as possible. Those what would be some of the steps I would take. But number one, having engagements. We used to see them, I think, 10 years back, where the private sector would be a party with government in trying to push this economy forward. There's a lot of that we're not seeing now. That would be really helpful, because the people on the ground are the ones who know what is pinching them.
Absolutely.
And I think that having the right those engagements would really help.
But don't we try that? We had the Africa Free Trade Agreement, we had AGOA, we had just most recently, when we talk about G2G partnership, there is one that Kenya has with the UAE, and there is one that Kenya has with the European Union. There is an education conversation that Kenya has with the US. So there are very many in terms of framework that has been set up. The folks who will be the drivers of these agreements is the private sector. And we would actually then be able to see the thriving of such. I mean, just look at the one with the UAE, for example, where it is private sector who is expected to fill in some of these holes when it comes to the movement of, meat product from here to the Gulf states. But the one who is supposed to set up the environment whereby this can actually happen is government.
You're right.
So do we see then some of the challenge being that there's a hump somewhere that you need to get over? Private sector may be ready. Framework is set up by government, and to allow those channels to be open, government has to be the one that would just open the door.
I agree with you. I think it's positive when you mention all these frameworks and trade agreements that have been signed. But beyond that, how can we encourage foreign investment coming in? A good, I think, statistic I could put out is when you look at foreign direct investment into Kenya, has been on average, I think, $500 million every year. If you compare, for example, foreign direct investment going into Tanzania and Uganda, it's close to $2 billion, $3 billion, almost $4 billion dollars. So while the frameworks are good, we're not seeing foreigners, for example, being interested in coming to set up shop here. I think because my answer to you is, as we wait for the private sector, there's need for capital to be able to drive the setting up of these businesses that will take advantage of all these frameworks. So making Kenya a very attractive place for capital to come into this economy would be something that would be very critical in my view. And we're not seeing that happening at the moment. To some extent, I think we are seeing what I call the portfolio investors coming in, those who come in to buy, going to our stock market, going into our fixed income markets. But the longer term capital that sticks in a country much longer, we're not seeing that happen, I think, and that is what would transform this economy.
Yeah, and but just to backtrack on what you're saying is, if you look at the economy right now, Kenya is at the verge of getting into industrialization. Manufacturing is big and all that, and with that coming from the fact that the background, 22% of the economy, agriculture. then comes the aspect of value addition in making sure that we attract investors to come in, set shop, or we set shop ourselves and go bigger into the export sector. And this is an area that has been lagging for a very long time. So in terms of addressing that, adding value to our own product, hence attract more, would that be an area that the government should be intentional about?
Yes, it would. I think it's been, when you mention that, I think it's something that we constantly hear government talk about, value addition, but we don't seem to see much of like progress with that, or it still remains a discussion point. So I guess it's moving from just discussion about value addition to actual action, allowing businesses to move into that direction. We are seeing, to some extent, there has been improvement. You do see on the agricultural side, for example, you do have millers who buy maize, but it's for domestic consumption. You have milk production. We do have companies that produce milk. They add value to that, sell yogurt in this economy. So to some extent, yes, it's happening. But I think we need to see more of that and probably increase diversification to other products. We still, for example, in the tea sector, sell our tea to Europe and to the Middle East in raw fashion. Possibly the tea sector could be an area where we could see that increased value addition. But I guess it's moving from just conversation to actual implementation, and it still speaks to attracting those who can set up those kind of businesses here, rather than if the skills are not available. Maybe that's what's hindering people from setting up here, or the unwillingness of local business people to take that risk.
Are there enough foreign investment initiatives in Kenya? And when I ask, are there enough, what is enough, and what is it that we look at to determine that what is received is either insufficient for our needs or it is sufficient?
Well, that's a tough question. Are there enough? You don't see. You don't seem to see it a lot when you read our newspapers of businesses being set up. Partly, it could be that a lot of these projects are tied to government, and you then have to wait for government to move for some of these projects to be implemented. And in this environment where you have government not able to invest, I think this the focus for example, this government has been in paying off debt. Then there's a lot less that's happening on the investment side. So I think that would be my response.
Because I asked the question, see, the foreign investment and a foreign investor understands that whatever the investment is will be for their benefit.
Right.
Now, if we benefit, it's a value add for us. So it's marrying two interests and ensuring that the marrying of that interest will actually meet the needs that the country currently has. If it's in the agricultural sector, if it's in the commercial sector, if it's in the industrial sector. Now, I ask this question because there's been conversation about foreign direct investment going to our neighboring countries. Okay. The question as to where it is that this investment is directed to, as opposed to the ones we received, and where it is directed to. Because another school of thought also says that there are inquiries and there are foreign investors, more than we can handle, who are very keen to invest. So the keenness doesn't seem to translate into action.
Results, yeah.
So here we are. We're looking at the discussions, and then there's the reality. Because if the foreign direct investments, or what it is that we hope it would be, there's something we would see, and there's something we would witness, there's something we would experience. The banking sector will probably experience it quicker than the rest of us, because the activities of the banking sector are usually a very clear indicator of what's happening within the economy. These things that we would see, what are they exactly?
So that, to your point, yes. From where we sit,
Yes.
We would see an increase in foreign. How do I put this? In a lot of projects being put out there, I guess.
By government?
It will be. I think it would happen by both government and the private sector. But again, it goes back to how, on the government side, how will these projects be executed? Are they government funded, or I know this government has spoken a lot about public-private partnerships, and that's one mechanism that they'll likely consider to do these projects. There's been a challenge as to the frameworks and how investors are selected to do these projects, and I guess once they're able to crack that, hopefully you would be able to see some improvement in the level of investment.
Yeah.
On the private sector side, I guess it still seems tied to government. I mean, how easily is it for somebody to say, I have $100 million, how can I bring that into Kenya and establish a business? Is it easy for somebody to do that in this economy? What regulations will they need to go through? What hurdles do they need to, check boxes will they need to tick to be able to...
But isn't that what these economies that we often look towards, for example, have done exactly? Is that essentially what they've done is that they've given free rein with regulation in place for the private sector to essentially come, because it is the private sector that has boosted these economies. When we look at things that went as far back as, let's look at the rebuilding of the world after 1945, is that even with Marshall plans in countries like France and Germany, even with Marshall plans, and there was a whole bunch of money that came into these economies, thank you, is that you still had government in place, there were regulations, but you essentially gave businesses who wanted to come out, you ensured that you gave them some of this money, number one. You ensured that you gave them enough wiggle room to be able to do what they needed to do within regulation. And then you also ensured that you were not going to make it difficult for them to operate. They don't have to get 37 different licenses to do something, for example. They don't have to wait 45 days for a license to come out. They don't have to then be taxed to within an inch of their existence to be able to operate. And that is how economies grew. The economies that we speak of are not government-funded economies around the world. These are private sector-backed economies till today. The US, typical, one of them. But we look at China, again, big economy based on government initiatives that allowed the private sector to grow. It seems like a no-brainer to me that you want to get your economy from here to here. These are the 1, 2, 3 things that you need to put into the formula, and boom, you have a result. Why don't we do that?
I think, to me, it's unwillingness to address usually the elephant in the room. The fact that we have corruption in this country, that could be one of the reasons why, the main reason. The fact that the frameworks are in place. We've spoken about them. You have export processing zones, special economic zones that have been set up by government, but
you have KIPES.
You have all manner of positive things that are being put in place, but as a country, we still have to address the perceptions that are out there concerning our country. We, especially for African economies, you're facing competition from other African economies. So before an investor sets up shop here, they're looking at Egypt, they're looking at Nigeria, South Africa. And a lot of times, if they feel it'll be easier to set up shop in another country, they'll rather take that option than come to a country where they feel they'll face hurdles. So I think that, to me, would be how addressing the stumbling blocks that make it difficult, that the investors perceive it'll be quite hard to operate. Will they have to will they lose money if they try and establish a business here relative to establishing it in an economy where the challenges of corruption are a lot less.
So based on this report, and what would you recommend? And
Based
to
on
say
the
that,
PMI?
yes,
Yes.
what would you recommend and say, well, these are 1, 2, 3 that moving forward you should take
All
on?
factors considered.
Yeah.
Inflation, God knows
Interest
what
rates.
else. God knows what else and else, yes.
International movements as well.
So I would say positively, inflation is headed in the right. It's in the right place. It's quite favorable at the moment relative to other economies. We've had a stable currency, so there is positive momentum there. I would say working on addressing, and that's quite difficult. The level of corruption in this economy would need to really come down. If we had concerted effort to address that, that would really help to attract investment, because it does dent economic activity, both internally and also from outside. People questioning whether it's good value to do business in Kenya. Again, I would also say you should never discount Kenyans, because despite all the shocks that we've experienced, we somehow were able to achieve growth rates that are quite commendable. 4.6 last year. We think this year growth will likely be around 5%. Despite the cost of living pressures, despite all the challenges that we faced, you're dealing with a very resilient society.
Indeed.
And I think for me, that is one of the selling points for Kenya, that aside from all the shenanigans that happen in this country, you still have a very resilient population.
Indeed.
And I think that is good when you're doing business.
And want to go on and want to end on as well. Thank you very much for sharing these insights with us this morning. And, just coming off the PMI and seeing then what the forecast is. The hope is that, the elements that are needed to complete this formula and to keep it growing will actually be inputted. Christopher Legilisho is an economist with Standard Bank, and he's been our guest this hour. Thank you so much for being here, and looking forward to future conversations. Good morning. It's 9 a.m.